Hi traders and welcome to the Technical Analysis Market Watch on Friday the 10th of August. So I've seen the news pretty much put a torpedo through a lot of the markets that we're going to talk about today. We can see that the last hour or last 2 hours especially in the US was pretty ordinary for the indices and some of the currencies. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and you can see we've got a very, very interesting daily candle. We had, look, at one point, it was basically trading at all the way up at 66.15, okay? So that was a daily range for it, and it's ended up all the way down 100 pips lower, right on the base of the support at around that sort of 65.20 level, which we know is a very, very strong level from the previous touches. And also, it was only just last week that it was actually here again. So all but got to the 20 moving average, but then sold off very, very aggressively. And when you go to a 1 hour chart, again, the dollar index will probably tell the story here. But you can see effectively the last half of the session was very, very ordinary, but it really started to finish very close to its low. And that really tells the story and paints a pretty ugly picture of where the market's really at. The CPI data is out, and look, it didn't miss by very much. It was only 0.1%, lower than the expected anyway. But that's the funny thing with the news at the moment. Like, you don't really know, even whether it's a good result or a bad result. It's all about the inflation story, and anything that could potentially affect that is going to upset the market. So the market is looking for any reason to sell off at the moment, and we know we're going into a seasonally weak time of year. Generally, late August, early September traditionally has been a little bit soft. So it's not that big a surprise that the market's looking for reasons to actually sell off at every opportunity. But in particular today, we saw a very, very big reversal. Like, look, when you look back, the best course of action is always to look in the past. And you can see that every time we've had a similar candle to this, you can see one there. Generally, it leads to further weakness, and it's a very, very negative sign when you see that's effectively a shooting star candle, a very, very big shooting star candle at that. Where the open and the close is at the base, but it had a very, very big range, 100 pips in the daily candle like that. For it to close and open at the same point and reverse 100 pips is a lot, okay? It did reach 66.15 just about, and it's effectively closed down here at 65.20. So that's a very, very big range of movement. It's at support though, there's no question about that. If it's still trading above this level on Monday or into New York trading, tomorrow, we're going to be looking at a potential bounce from this level, maybe up to the 20 moving average, up to the previous high here. We know that there is a bit of support there. You can see right through these bottoms here, there is support there, and the 20 moving average is getting closer and closer to that. So it wouldn't surprise me to see it test that level again. But just be mindful though that it is, if we do get a daily close below this level and we're trading in the 64.80 zone, then that bodes fairly weak for next week, and we could be looking for potential shorts from that level. But again, if we see strength at this point, we know there's support. If it starts to pick up, the short-term target would be around that sort of 66.15 again, back up to that previous resistance. And if we get a daily break below the 64.80, then we'd be looking for shorting opportunities down to the extreme lows at around that 64.50 and then the 64 cent mark. So interesting trading on the Aussie. The US dollar CAD is obviously a little bit of a reverse of that. We saw weakness and then it ended in a strengthening position up around that 134. It's been very, very strong. You can see that we've got effectively what looks like a big double bottom. Okay, we know we've got the divergence there as well. And it did come back and retest the neckline from above. So that's always a pretty good sign, and it's certainly off and running now. You can see this candle is a very positive candle. Tried to sell off, but has ended up closing at its highest point of the range at 134, nearly 50. Pretty strong. Look, it's one of those ones where if you're not already in, it could be a tough one to get into, because really the trading was around this level here when it broke through and came back and tested it. It's been a bit of a volatile ride over the last few days, but in reality, if we're trading above this level or even at this level on Monday, then I'd be thinking that we're probably going to be moving higher, and the very first target will be the 135, of course, as an interim take profit target. But then the secondary target's around that 136.30, we can see here. I'll pop a horizontal line there. That's the ultimate target for this first initial move. That's also the move for the double bottom. If it plays out, the distance between here and the neckline will be where it goes. So that's a pretty straightforward target for it. But look, in reality, though, we need it to be trading above here at around this level or higher in tomorrow's trading or on Monday. If we've got that happening, then we're going to be pretty satisfied the momentum is going to continue. A change of trend, of course, and a weakness from this level, and we could be looking at shorting it down to the 20 moving average, around that 133.20 mark. But that's not the preferred trade because that's against the momentum at the moment. So probably not the preference of where the CAD's going to go. US dollar yen has certainly found its stride now. You can see that the moves have been strong. You can see we landed on the 20 moving average, got the reversal candle we were after at a very, very good level. Roll reversal zone. You can see that's a resistance right through there. Came back and tested that and the 20 moving average as a bolster. Always a very, very good sign. And that trade's already hit its target. This is the target that we're going for, the previous high, and you can see it's already done that. So if you were in that trade and you followed it, now would be probably the time, at the very, very least, where you would either be breaking even or taking some profit off the table, because obviously it's approaching a pretty significant resistance zone. And to get back into it, or if you have not been able to get into it, I'd let it break this level first and let it come back and retest it from above to below it. If it does that, then it gives us a chance to get in. And if it doesn't do that, sometimes you just got to let them go. If it reverses from this level and starts to weaken, and we see a series of lower highs and lower lows on a smaller time frame, I'd be looking at reversing it back down to the first level here, around that 143.20. You can see here that roll reversal level will more than likely hold up in a reversal from this point onwards. So the short would be looking somewhere around there. But yeah, in reality, you probably should have been able to hopefully get into this trade. And yeah, you should have been able to take profit on it. So the US dollar yen has been pretty good trading. Okay, dollar index. So we've got, look, obviously, yeah, this and the euro are going to look identical, except in reverse, of course. We saw a big attempt to push down, and of course, the last little bit really pushed it up. Now we've got a big, big hammer candle facing up. Okay, trading well above the moving averages now on a daily chart, and still hasn't really pushed on to the 103.30 mark, which is probably where it's going to find the first real resistance for this one, but we need to break this zone. But the euro is obviously the one we're going to talk about, because that's the one we're going to trade. It tested the resistance above. You can see in today's trading, it got to the 110.50, but sold off very, very aggressively. And we're seeing a very similar candle to what we saw on the Aussie USD, where it just completely reversed all of its potential gains for the day, in a range to like we got a close here around that sort of 109.80 area, and it did go as high as 110.50. So a pretty big range for the euro. And again, you don't see a lot of candles like that. You've only got to look to the left of the screen, and you don't see a lot of candles that sell off that badly and end well. So if it's trading below, I still think it's a pretty strong level here, though. It is a strong roll reversal zone. So if it holds up at this level and finds a series of higher highs and higher lows on a smaller time frame, you can look at taking it up to that previous level of 110.50, but I wouldn't be going any longer than that until it actually breaks through, closes above there, and tests it from above. I wouldn't even be taking the first break on that one, because I think it's got a bit of work to do. Okay, if we get a break below the 109.20 area, so if we get a daily close below this level in tomorrow's trading, or on Monday, then I'd be looking at the next support zone, which is around that 108.50 area, which is this zone here, this green line here. If we get a break just below here, this is what we're targeting for the shorting opportunity. So small change of trend to the upside, and we're looking at longs up to the 110.50, and a daily close below this level. I'll be looking for shorting opportunities down to around that 108.50 level on the euro. All right, the US 500 tells a very similar story. Attempted to go higher, 45.29 at its best. The 20 moving average is well and truly controlling this indice now. It's trading below it, and really it's make or break time for it. This is a level where it must hold up if it's going to have any strength next week. If it fails to hold at this level and we find ourselves trading below the 44.20, then it probably opens itself up to a move down to the 43 sort of 30 area, I think, is the next level of support for it. This is a very, very important zone. I can't emphasize how strong this level is. If it fails to hold, then it really opens itself up for a sell-off down to the 43s or low 43s. If we get that reversal, and look, it's tried 3 times and failed 3 times. So every time it does it, it gets that little bit weaker again. And this has probably been the most negative candle of them all. In the most recent trading in the last week and a half, this has probably been the most negative candle. So keep that in mind. But if it do get a smaller change of trend on the way up, then we'd be looking for the previous high in the first instance, the 45.70 area would be the level I'd be looking for the take profit. But again, the 20 moving average has been a very, very strong barrier for us. So even a very short-term scalp would be probably looking and finding potential problems at around that 45.10. So just bear that in mind when you are looking at long opportunities. But a daily close below this level, especially if it's early next week, and we could see a bit of weakness next week, and to the tune of maybe 43.30, which would be my target if we get a close below this level, because once that happens, we've got the lightning bolt on the way down. And generally speaking, the momentum has definitely shifted from an uptrend to a prevailing downtrend on the daily chart. So hopefully you've had some good opportunities this week of trading. I think we've had some pretty good ones play out on a few of those currency pairs. They hit their marks. Hopefully you're able to take advantage of those. Have a fantastic weekend, and I look forward to seeing you all next week.